Hello, today I am going to talk about the latest quarterly financial performance of Wabco and Bosch and the outlook going forward. Both the company posted an inline set of numbers given the weakness in the demand in the automobile segment, especially in the commercial vehicle segment. Let us discuss the key highlights from the result. Both of the companies posted a subdued top-line growth. Bosch posted a growth of around 1%, Wabco posted a growth of around 8% in its top line as compared to the same quarter last year. Talking about the Bosch first, the subdued growth in the top line came on the back of the flat growth coming in the automobile segment, which forms or which contributes around 80% to the Bosch's top line. And powertrain segment witnessed a growth of around 2.7%, whereas aftermarket witnessed a decline of around 4.8%. Non-mobility segment also witnessed a growth of around 5%. Moving on to the Wabco, Wabco posted a growth of around 8% as I mentioned earlier. This was primarily because of the 4% growth coming in from the original equipment manufacturers and 12% growth coming in from the export market, whereas the company witnessed a decline in its aftermarket segment. Moving on to the operating profitabilities, both of the companies' operating profitability was marred by significant rise in raw material prices. Bosch witnessed a contraction of around 92 basis points in its EBITDA margin, whereas Wabco witnessed a EBITDA margin decline of around 107% in this quarter as compared to the same quarter last year. Now, moving on to the stock outlook, there are a couple of factors that we need to look out for these companies. First is the domestic industry outlook. Fortunes of these companies are highly correlated with the demand in the commercial vehicle segment. Commercial vehicle segment did phenomenally well in fiscal year 18, whereas there has been subdued demand in fiscal year 19, primarily because of various macroeconomic challenges led by increase in the fuel prices, liquidity crunch, non-availability of retail finance, and the new axle load norm, which have dampened the demand for commercial vehicle segment in India. So what we believe that the demand outlook is very sluggish in short term. However, it continues to be very positive in long term, primarily because of government's focus toward infrastructure, mining and construction activities. What could act as a short-term trigger for these companies is the implementation of BS6 transmission emission norm, because this would lead to a pre-buying of vehicle, as the BS6 compliant vehicle are expected to be expensive by around 10 to 15%. Apart from that, government's scrappage policy would lead to replacement of around 200,000 to 300,000 vehicle on road. This would provide a strong demand for the components of these companies. Next is the dominant position. Both Wabco and Bosch are the leaders in their respective market. Wabco has around 75% market share in air braking system, whereas Bosch on the other hand has a market share of around 85% in diesel injection systems. These are the only auto ancillary companies which have bargaining power with the original equipment manufacturers. And finally, the valuations. On the back of their strong financial performance, both of these companies continue to command premium valuation. This is despite the recent weakness in the stock prices. What we advise investors is that to accumulate these companies on the back of the muted demand that these companies are currently witnessing. So overall, these companies are in a strong sweet spot to take the advantage of the growth coming in the commercial vehicle segment in India. That's it from my side. For more news and update, please log on to moneycontrol.com.